All right, this is Nick with Lions Den. I put out a video Sunday. We're going over earnings. I picked one stock for Monday, Tuesday, Wednesday, Thursday, Friday to highlight. I went over the earnings per share, revenue that's expected, what they did in the previous quarters, and what I'm expecting. Some I dove a little deeper into, like iPhones with the sales and Tesla with the tax credit that was taken away in California, explaining the registration drops. But I'm looking back at what we have coming out for earnings, and there are a few stars company-wise that I think are pretty important. So I figured I'd make one more quick video today just on a few others that I wanted to highlight. Like I said, on Sunday, I chose Apple for my Tuesday highlight, but Starbucks is also putting out an earnings today. And then tomorrow, Wednesday, I chose Tesla as my highlight. But we have Boeing tomorrow, Facebook and Microsoft tomorrow, General Electric. So some other big names for Wednesday that are growth stocks that move a lot, that are very volatile, that there's a lot of opportunity for money in all those. So I didn't think it was fair to just highlight Apple and Tesla for Tuesday, Wednesday, when there's these stars of companies that are reporting. So let's jump right into it. I'm gonna show the graphs where they are. I'm gonna use a 90-day graph on my TD Ameritrade Thinkorswim app to show where it's at in relation to the last earnings. I want to see how the MACD indicator, remember our MACD is going to be the momentum indicator, and I want to see the RSI indicator. That's going to tell us if the stock is overbought or oversold. That way we know what we're getting ourselves into going into today for Starbucks and Apple, and tomorrow for Microsoft, Boeing, General Electric, and Tesla. So let's jump right into it. All right, let's jump right into it. So I am using the 90-day 1 hour graph. You can see here, that's the 1 hour, and it's going to be a 90-day 1 hour. What that means is here, each candlestick represents 1 hour. Green obviously being a positive hour, red being a negative hour. If you want to focus in a little bit closer to give you a quick checkup, a quick rundown on candlesticks. If you see this candlestick here, you'll see it's thick and it's colored in the middle. So the stock opened up here at $93 here. You can see $93 represented by that number to the right of my pencil here. And then it came up to 94.11 and then dropped all the way down here to 93.41 and then came back up and closed at 93.58. So these little these thin lines are just where it went to in between the hour. If it's red, it means that it opened here and it closed here, but it had a movement of all the way up here to all the way down here. This is just where it opened and to where it closed. Same thing with your green mark. It opened here, it closed here, but it did at some point drop below its opening for that hour, and at some point it rose above its closing for that hour before coming back down to where it closed at here. Just a quick education on a candlestick, just so those of you who are new to it know what you're looking at there. And then, like I said, this is 90 days, so this entire graph here is going to represent 90 days. But let's go into Starbucks. So Starbucks today is trading at 88.78. We are on that 90-day graph. So let's see. Starbucks, I think, has an EPS of 76 cents. So Starbucks is expecting 76 cents earnings per share, and they're expecting 7.11 billion in revenue for this quarter. So last time that Starbucks gave earnings, it was right here about. So we're going to say right around here is where it started. And I already drew my trend line when I was looking at it earlier. So we are about, it was about at 84.60 when it gave earnings last quarter. And today, right now, it's at about 88.76. So we're about $4 above where it was at last time it gave earnings. With that said, let's look at what it was expected last quarter and what it actually delivered last quarter to give us an idea of where we think this stock should be at as of today. So we have Starbucks here. Starbucks delivered, they were expected at 70 cents and they delivered 70 cents. Exactly what people were expecting. That's not really great news. Anybody that knows the market knows that things don't really change, or at least change positively, on what's expected. They don't usually drop drastically either on what's expected. Things just kind of move around the current price at that, if on that news. When something happens that's unexpected, if Starbucks was supposed to deliver 70 cents and they delivered like $1.35, something large, then you might get a huge spike. But they were expected at 70, they reported 70. And on the revenue last quarter, they were expected at 6.69. They delivered 6.75, so they beat it by just a little bit. But the earnings per share was dead on, so people weren't too excited. It came down a little bit, and then within a couple of weeks, it came right back to where it was, and then it slowly has grown since then. So it wasn't an exciting earnings. And this isn't a growth stock. I do a lot of talk to you about growth stocks. I love stuff like Apple and Tesla, Roku, Microsoft. These are stocks that have tons of volatility and they're considered growth stocks. So when they deliver their earnings, there's usually a large influx of volume. And that stock, I mean, that stock can move big time. Tesla moved last time over $50. Apple, I wouldn't be surprised if Apple had a shift of $10 to the up or downside, either right after earnings or within a few days. So those are growth stocks. They move a lot more. Starbucks isn't a tech company. It's not a growth stock. So it's definitely not going to be one of those, buy it and then tomorrow morning wake up with like a 300 or 400% profit. I'm sure it's possible, but just don't be buying Starbucks expecting that kind of swing, because it's not Tesla. It's not gonna have that huge influx of volume. People just aren't that excited about coffee. Not that Starbucks is a bad company. I love their coffee, but it's not technology. It's just coffee. So it's not the growth stock. That's going to be delivered today. So if you do want to jump on this, I know I'm getting this video out late. It's going to be around 2:45 by the time this video is actually uploaded. So you got to make a move soon. A lot of times it's best to just wait till after earnings. You don't want to take that gamble. You wait till after earnings, and you can ride the stock up over several months and play it a little safer. So don't rush to buy it if you do like what Starbucks is going to deliver, or if you think you're going to like what they're going to deliver. Let's go into tomorrow. Wednesday, I was going to do, like I said, I was going to do only special Tesla on my video that I did Sunday, but there's so many good stocks tomorrow. We have Boeing, we have Facebook, we have Microsoft, and we have General Electric. I'm not going to get into General Electric. I don't ever trade General Electric, but I do want to get into definitely Facebook, definitely Microsoft. I'll take a quick look at Boeing. I don't trade Boeing. There's been a lot of problems with that 737 MAX. They got a new CEO. It's a very high profile company. Um, but I took a look at it earlier, and it looks to be right around its 1 year support, just under it actually. But this earnings a lot of things can change on this earnings. And with that 737 MAX being with all the problems it's had, I don't know how much they've lost, or if they've lost any. I mean, you might get a surprise. But let's take a quick look there. So we have Boeing here. Boeing is going to be they're expecting a loss. So at least they're not expecting a gain. They know that with all these problems, they're going to get a loss. So they're expecting a loss of $1.83 per share on their EPS. But their revenue, they're still expecting 21.76 billion. They also delivered their last earnings on October 23rd, so right around this time as well. Let's see if I can just move this graph back a little bit for you to get the exact price for their EPS, their last one, and we have it right around this area here. So we're going to say right now it was probably right around 339. And it rose, and it's kind of crazy that it rose, because last time it was expected to deliver $2.11 earnings per share. It delivered $1.45, so it missed by 31%. It was expected to deliver 19.96 billion. It delivered 19.98 billion, so not enough to really grab any attention. It barely beat on revenue, but it missed on the earnings per share by over 31%. And then the stock still gradually grew. And even with the 737 MAX problems, the CEO leaving and being replaced and a new one coming in, it still rises. And over the year, if we take a look at the year, 1 year graph with all this mess going on, it's still only down a percentage of what it started the year at after all that mess, which shows the resiliency of Boeing. I can't give my opinion on if I think it'll go up. I just like how tough of a company it is. It's like one of those like American companies that everybody knows and like old time traders invest in. And you can see right here, it's right below. If we said that this was its support, give or take a dollar or two, how it's bouncing off that line here, it's just right at that support. It went right below it, but it came right below it, and now it's right back at it. So if you want to go off just technical analysis, which I never recommend on earnings because earnings can completely reshape the trend and the graph, the wave. It can change the support, it could change the resistance. But if you wanted to go off technical analysis, I mean it's right there at the resistance. And based off technical analysis, you could probably say that this stock could jump up to 372, which would be a $55 or so spike. But that's something you got to do your homework on. That is technical analysis, which is not enough alone for doing earnings. You have to get into the background of the company. And this company has had a lot of turmoil this past year. So this is a scary one to play. Definitely do your homework. This is a big company. And yeah, with all that going on, I don't know if this resistance, I don't know if this support's going to hold. It really all depends on what they deliver. I like I like the direction it's going. I think it's going to recover. I just don't know if it's going to be a recovery tomorrow. Next up, tomorrow, we also have a big one. We have Facebook. Take into mind, this graph is still in the 1 year because we just showed that on the Boeing. But we have the 1 year graph here. Facebook on a nice rise. Let's take it to the 90-day 1 hour graph. 90-day. Change this 5 minute to an hour here. Okay, here we are. So we're at our 90-day graph. I like I've looked at Facebook. I like how they report their earnings because they're on a roll, and I never go against momentum. So I'll tell you why they're on a roll. So in Q4 of 2018, so they're going to be reporting Q4 of 2019 tomorrow. So we're going back a year. Q4 of 2018, they beat EPS and revenue, and they have beaten EPS and revenue in every quarter since then. So they're going on four straight quarters of beating earnings and revenue. And they're not beating earnings by like 1% or 2%. In Q4 of 2018, they beat by 9.3%. In Q1 of 2019, they beat by 18.21%. In Q2 of 2019, they beat by 6.31%. And in Q3 of 2019, last quarter, they beat by 12.86%. They delivered that last one that I just said on October 30th. So we're going to come over here, October 30th, bring this back. So October 30th, we're looking right around here. It had a big spike that day. Boom. This is where they delivered. Big spike up, about $4. Came back down, settled, stayed right around where it was. And then since then, over the past 3 months, has proceeded to grow $26 at its max, but it's up about $24, $25 since its last report. I don't like to go against momentum, so I would not bet that this goes down. That's just my opinion. I like to follow momentum. There's no reason to break a pattern. There's no reason to believe that Facebook will lose its pattern. But it has gotten up a lot in value, so it's scary. If we go off of its technical indicators here, its momentum has pretty much died down. People aren't trading it so much. You can see that from the past week or so, this line has almost not moved at all, and that's why it's looking like it's starting to flatten out here. You can see the momentum and volume was huge, and it started to slowly even out coming into this earnings. The same thing with the overbought, oversold indicator here, our RSI. It goes above and it goes below, it goes above, below, and then this past week it's kind of slowly started to funnel into right where it should be. This is a scary one. Like I said, it's Facebook. You don't want to bet against it. You don't want to bet against a company that just came out with 4 amazing earnings in a row, all great, and beating them by a lot, but not by a percentage or two. We're talking double-digit percentage on some of those beats. So definitely not one that I would go against. Um, I like the CEO. I like the company. I like that they're getting into cryptocurrency. They do have a little bit of issues with politics and elections, but outside of that, the company seems to be moving ahead strongly. So I like this one. Definitely don't bet against it. I wouldn't bet against it. I can't give you that advice, but I would be very cautious with betting against Facebook. Unless you've dug deep into this and you know something, I don't know. But I don't go against momentum. Not going to go against this one. Take a look at Microsoft. This will be the last one that we take a look at today. Microsoft, a huge company. What is it? The second biggest company in the world next to Apple. So here we are on Microsoft. Microsoft gave us an earnings last time. See what they had for earnings. Last time they reported. So Microsoft, another one that has great momentum. They're looking for $1.32 on the expected earnings per share. So they're looking for $1.32 on their EPS for tomorrow, and they're looking for 35.68 billion tomorrow. To put that in perspective, last quarter they were expected at $1.24. They gave you $1.38, a 10.98% beat. They were looking for 32.24 billion. They delivered 33.06 billion, a 2.5% beat on the revenue there. And guess what? In quarter 4 of 2019 and quarter 3 of 19, it beat both EPS and revenue as well. And they were also on the EPS, it beat by 12.8% and 14.17%. So big beats there. Again, just like Facebook, big beats on the EPS. Another one I'm not going against. Microsoft. Microsoft always does well in earnings. It's almost always doing well. Look at this graph, almost straight up. And that's on a 3-month. That's on a 90-day. Look at a year. It's even doing it on the year, straight up. We're at $102 last year. We're at $168 this year. I'm not going against Microsoft. If anything, I'm going with it. I'm definitely, in my opinion, if I'm trading this stock, I am buying options and I'm following this one up. Always do your homework, but not going against this one. Even if we pull it back to the 90-day graph, let's take a look at the technical analysis on this 90-day. So we go 90 days. We're going to switch this back to the 1 hour. So we're taking it back to 1 hour. Look at the momentum here. So momentum is pretty big, and it stays swaying a lot. And then we got that news with the virus on Friday, or when everything just tumbled down. So it took a drop, and now it's starting to recover. It's recovering today. It's at 165.51, just under $3 shy of its all-time high. But the momentum is spiking largely here. It's being called overbought, but like I said on Sunday, can you really say that Microsoft or a company like Microsoft or Apple is overbought or overvalued, especially when they do rises like this and they're continuously growing? I don't think it's overbought. I don't think it's overvalued. I think that momentum is perfect going into earnings. You're going into earnings with a lot of power behind you to push through any resistance and try to break into new barriers if it's a good earnings report. I like their odds of reporting a good one. They've had 3 straight, and I don't want to go against the trend that they've set. If you trade options, I have to stress this. If you're trading an option and you haven't bought it yet, there is a very, very good chance that the option's implied volatility has spiked. It is probably through the roof. You can tell just I haven't even looked at it, and I haven't bought an option on Microsoft, but you can see this momentum fell down, and now it is spiking. It went from being in the red, now it's a large green here, and it's coming up quick, which means a lot of people are interested in it, which means a lot of people probably think it's going to beat. So they're excited. Microsoft came off its high, giving people a buying opportunity. They took advantage of that buying opportunity. There's a lot of volume in there, which means implied volatility is probably through the roof on options. And if you know anything about options, implied volatility is a direct correlation or reflection of uh, supply and demand. So that means that supply might be low and demand is very high. So volatility could be well over 100%, and you could be paying double or more for what this option is actually worth at this price. And I told you this on Sunday, even if the implied volatility is that high, even if you buy a $170 call option and Microsoft goes to 171, you might even lose money on your option even though you beat it and you were right. And it's because you were not checking implied volatility. You need to check implied volatility weeks before earnings and then take a look at it at earnings so you have a comparison of where it should actually be under normal circumstances. So you definitely need to reference. That's a mistake I made at the beginning of my options career where I didn't check implied volatility and I didn't reference it to a normal implied volatility of that stock. And I would beat these companies over and over, and I kept losing money because implied volatility would spike coming into it. Everybody's excited. After earnings comes out, they're not as excited. They leave. Implied volatility drops. And even though you are right, your option becomes worth much less. So I just wanted to stress that one more time. I don't want anybody to lose money due to that, and it's a mistake I made, and I want you to learn off my mistakes so you're not making them. All right, with that, that was just a quick one. I just wanted to put out a quick video because the market's only got another hour and 20 minutes left in today. So if you did want to do Starbucks, I wanted you to have an idea of where it's at and how the graph has looked for the past 90 days. And I wanted you to have a little bit of an idea of what else is coming tomorrow because on Sunday, I only spotlighted or highlighted Tesla because that is my favorite one tomorrow. But there are Microsoft, Facebook, huge companies also reporting tomorrow. Good luck. If you do trade them, let me know how they went. Report to my Facebook page and like that if you haven't done so, please, because there's going to be these videos posted very routinely. And you can also follow the Facebook group, and I would love to hear how your trades are going. And you can do that through the Facebook group. You could talk to myself and the other traders on there, exchange ideas, let us know how your trades went, talk about strategy. We're all here to learn off each other. So I do hope to see all of you on the Facebook group. And as always, if you have not done so, please subscribe to the YouTube channel. Happy trading.